Holy schmoly, ladies and gentlemen, AMC stock, as you know, dropped a lot today. AMC, by the close of trading, was down about 10%. Let's go ahead and refresh this chart. Was down about 10.37%, up 2.5% in after hours. GME at the same time, if we take a look at this, GME did report earnings in after hours. The stock was up about 4% in after hours, initially selling off once the earnings did come out, and then you did, start to see this rally towards the end. Investors realize it's not as bad as thought. Now, that is not what we are here to talk about in this video. Forget GME. Why did AMC go from neutral on the day to down 10%? AMC for the beginning of the day, which we'll look at right now, was pretty flat and actually positive in the beginning of the day. And then you got the news that started to circulate that AMC was going to go bankrupt, or at least there was restructuring. And restructuring, just so you guys know, usually is done when a company is in really bad shape. When a company is in really bad shape, you might get an activist investor coming in, going to restructure the company, or just the board starts to restructure. That could mean getting rid of some people, that could mean cutting certain segments of your business, but typically it's an effort to save a dying company. Now, that is not what actually happened today. That is not what is going on. Let's get into this article, guys. AMC Entertainment drops amid report of lenders organizing on liquidity concerns. Now, let's get into exactly what is said. So it says AMC Entertainment fell 10.4% Wednesday amid a report that the theater chain's lenders have begun to organize as the company continues to burn through cash. First lien lenders and second lien lenders are working with separate restructuring advisors, according to a reorg report from earlier Wednesday, which cited sources. AMC didn't immediately respond to reorg or Seeking Alpha's request for a comment. Now, this is interesting, guys, because typically you're not allowed to do this in bonds. We're going to talk about that, essentially calling on a bond. You're not allowed to do that. Let's get into this tweet, though, first. It says, AMC says first lien creditors indicate willingness to provide DIP financing in bankruptcy scenario. Second lien creditors supported for company to avoid bankruptcy per 8K, November 30th, liquidity at 320 million, estimates 750 million liquidity needed to be viable through 2021. And why this is interesting is that bonds are not usually in this way. So what is a callable bond? Think about it like this. Callable bonds are like, hey, you lend a company money. There's usually going to be a time frame on it, right? That's essentially what you're doing when you buy a bond. You're giving a company money. You're getting this coupon that says I can get my full value back and all my interest payments along the way at a certain point. Or sometimes if they're convertible notes, they can be converted into stock. Sometimes you got that delay. Sometimes it's a year or two or even 5 before you can cash out of that bond. But typically the owner of a bond is not allowed to just call up a company at any time they want and say, we need our money back. That is not how the financial system works. That's not how shit flies. So that's my first issue with this. And the actual K8, like we seen in this tweet, or 8K I should say, I don't know why my brain wants to say that backwards, but 8K, there's no actual link for it, so I will have to dig into exactly what is said. But I would almost guarantee to you, creditors, they're not allowed to just call their bonds back. That's not how this works. Now, the key takeaways. What is a callable bond? A callable bond is a debt security that can be redeemed early by the issuer before its maturity at the issuer's discretion. A callable bond allows companies to pay off their debt early and benefit from favorable interest rate drops. A callable bond benefits the issuer, and so investors of these bonds are compensated with a more attractive interest rate than on otherwise similar non-callable bonds. And what this is the issuer. AMC is the issuer of that bond. They have the right to call these bonds back, but not the owners of these bonds. And that's where the situation gets very interesting. And from my perspective, obviously an outsider that has covered this stock for almost 2 years now and have been invested in this stock for 2 years now almost, I don't think the media is portraying this in the right way. I think it's possible that AMC wants to call on some of its high margin debt to get out of, that interest rate that is essentially killing them every month. But this is saying the actual bondholders want to get out of these bonds. They want to call on this debt essentially, and they are working with separate restructuring advisors. So maybe this could be a very positive situation. If these bondholders are that worried that they're not going to get paid back, that the company is going to go BK, then they start to restructure the company in a way that could make it a lot more profitable. So either way this goes, I don't think this is a negative thing. After all, we know the numbers with AMC and they still look very, very good. Just a quick Google search will tell you this about their liquidity. Oh, shoot. AMC Entertainment's cash. AMC, that's free cash flow. We gotta actually go ahead, go to the charts. See, the cash on hand, about $700 million is roughly what they have cash in hand. With credit lines, all that, I'm sure it's close to $1 billion, right? $700 million. That is enough to support them at least for another year out. And when these bondholders bought these AMC bonds, they knew what the hell they were doing when they went in there and they, gave them hundreds of millions of dollars to buy their debt, essentially, to give them this money for these bonds. They knew that AMC could have went bankrupt. That was a huge risk, and that's why the interest rates were so high. So it leads me to believe this is not the lenders, the people that bought these bonds that are saying, hey, AMC, you got to pay us this money. It's probably them coming in, trying to restructure the company to make it a better company. And it wouldn't even surprise me, guys. This is how crooked Wall Street is. Let me just tell you, it wouldn't surprise me if the whole rally that we have seen in AMC stock was potentially these same creditors that own the bonds getting long on the stock because they're going to restructure the business. That literally would not surprise me if that's what this whole rally was about. Nonetheless, either way I chop this down, I can't see how this is a negative, even though financial media wants to spread this narrative about AMC going BK and this is just a bad thing. I don't think it has to be. I think restructuring is a positive thing. They probably should have restructured a long time ago. Get some of those people on the boards that don't do shit. Get them out of there. Keep Adam Aaron, obviously. Start cutting costs in different places. Get new contracts. Do what you got to do. That's restructuring. That would be a positive thing fundamentally. And I just don't think it's legally possible for, people that own the bonds to call on AMC to get their capital back. I don't think that is even literally a legal possibility. So I don't see where the negativity is. And I think the markets will definitely pick up on that after we go through a little bit of pain, after, people get their fear, panic, emotions out. I think when the dust settles, this will be seen as a positive thing, because how could it not be seen as a positive thing? Unless AMC surprises all of us and literally declares bankruptcy with $700 million in the bank account, I think it's a positive thing, guys. And that is what I wanted to stress to you guys here in this video. So that is going to be it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.